On June 7th, NVIDIA is going to do a 10-to-1 stock split. And these stock splits, they're not complicated at all. As a trader, you don't really need to worry about them because they don't really create any value to you as a trader, and they don't really reduce any value. Value's neither created nor destroyed with a stock split. What's going to happen on June 7th, if you own shares of NVIDIA, all of a sudden on June 7th, you're going to have 10 times the number of shares you used to have at 1/10 the cost. But as far as notional value, you're still going to have the same dollar amount worth of NVIDIA if you own shares as you did on June 6th. The only difference is you're going to have 10 times the number of shares again at 1/10 the share price. This kind of stock split, which is a normal stock split, sometimes it's called a forward stock split. These are actually really common, especially with some of the big tech companies that grow very fast. So companies like Amazon and Apple and Microsoft, a lot of these really large trillion-dollar tech companies, they've done many stock splits in the past because they want to keep their average share price down. Because, for example, when you get to a share price of several $100s, or in some cases several thousands of dollars, it really limits just your standard retail trader being able to trade your product. Because if you have a small account, you can't afford very many shares of a really high price stock. Sometimes you can't even afford one single share of a really high price stock. So a smart thing for these companies to do, like NVIDIA with its current share price hovering around $1,100 per share, not too many people can afford that. They can't comfortably afford to buy a one lot of NVIDIA. One lot, by the way, is 100 shares of stock. By the way, options are also in lots. So options represent 100 shares of the underlying stock. So if you wanted to trade options on NVIDIA, it's really limiting unless you have a very large account, right? If you have a smaller account, you're really limited in what you can do with NVIDIA. You have to do defined risk trades, and even those can be a little risky because nothing is ever truly defined risk. Sometimes weird things happen, even with things like credit spreads and debit spreads and iron condors. Sometimes you may end up in a situation, especially if you do something dumb like hold options all the way to expiration, you may find yourself in a situation where one leg of that iron condor does get a sign where the rest of them aren't exercised or assigned. So, one of the things that really helps out just your standard average trader is to keep their share price down to a reasonable level. And that's what NVIDIA is doing. Now, all of a sudden, that $1,100 share price is going to turn into a $110 share price, which is much more manageable for the vast majority of traders. For those of you that are holding options through the split, what's going to happen with those option prices? Well, those option strike prices, they're also going to be cut by 1/10. So if you currently hold an option for the 1100 strike, all of a sudden on June 7th, that option that you hold is now going to be at the 111 strike, for example. So you just cut it by 10. And any strike that's not evenly divisible by 10, what's going to happen? Well, they'll be in halves or quarters. You might see, some strange strikes like the 111.25 strike and things like that. Luckily, dividing by 10 is pretty simple, but we had this situation just a couple of months ago where Walmart did a 3-to-1 stock split, and a 3-to-1 stock split naturally leads to some weird prices because you had strikes like the 60 strike, and then you had the 60.33 strike, the 60 and 1/3 strike, right? And then 60.66, which is 60 and 2/3, and then you had 61 after that. So it led to some weird pricing when you do splits that are not, even tens, because I think Amazon a year or two ago did one where they were like a 12-to-1 split, and that also led to some weird options pricing after the split. But just like with the actual shares themselves, value is neither created nor destroyed. It's the same thing with the options. If you hold options, the strike prices may look a little different, but whatever notional value you had in that options position, you have that exact same notional value after the split. Now, one thing to be aware of is that stock splits traditionally are seen as a good sign. It's seen as a sign that, hey, this is a good time to buy that company. It's a good time to invest in that company, because why would the managing officers of NVIDIA want to do a stock split? Well, they want to do a stock split so more people can invest because they see their company as a good investment. Also lowering the share price. Remember, lowering the share price allows more people to invest. People that don't have as much money now can also invest in NVIDIA. So there's going to be a ton of people with really small trading accounts that never could invest in NVIDIA before, and now all of a sudden after the split, these smaller accounts are going to pour in a lot of money. So don't be surprised if right after the split, NVIDIA is going to see a bump in price. I promise you, it's going to see a little bit of a rise. Now, whether it's able to hold that increase in share price or not for the long term, who knows? It may just come right back down after a few days or a few weeks. Nobody really knows, obviously. You can't really predict markets, right? Markets are random. But I promise you, right after the split, we're probably going to see a bump in share price. Also, anytime a big company does a stock split, it's big news. You're going to see on CNBC and Bloomberg and all the financial networks, they're going to be pumping up the stock. Also, all the financial influencers, the finfluencers on YouTube and TikTok, these guys are really going to be pumping NVIDIA hard, right? So you're going to see a lot of activity, a lot of frenzied buying around NVIDIA right after the split. Now, having said all that, I do want to warn you guys about buying into NVIDIA because of the split. Even though traditionally, these splits are a positive sign. Do not ever buy any stock just because it's having a stock split. That's not the right way, especially for those of you into long-term investing. You want to buy shares of a company to hold for the long term. I'm talking multiple years, if not decades. Make sure if you're actually investing a large sum of money into something like NVIDIA, you've done your homework and it's a position that you're comfortable with and you don't mind owning for the long term. For those of you that are just wanting to make a quick buck to play this thing for a few days or a few weeks, this is kind of risky, right? Again, I don't like just buying a company. I don't like buying shares of stock based solely on the fact that it's having a split. I think that's the wrong way to go about this. One other type of stock split I do briefly want to touch on is called a reverse split. Remember, these typical stock splits, these regular splits, are really forward splits, but there is such a thing as a reverse split. And a reverse split, as the name implies, basically is the exact opposite of a forward split. So if you did a 10-to-1 reverse split, what it's going to do is it's going to increase the share price by a factor of 10, and it's going to decrease your number of shares by 1/10. So why the hell would any company want to do a reverse stock split? That seems like not the way to go, right? Obviously, if a forward stock split is seen as a positive sign, reverse stock splits obviously are seen as a bad sign for the company. But sometimes companies are forced to do these reverse splits because if they're on one of the big stock exchanges like the New York Stock Exchange or the NASDAQ, and they want to remain listed on these exchanges, sometimes these companies, their share price declines so far that they become, like penny stocks, dollar, less than $1 sometimes, just a few cents a share, and they're going to get kicked off the New York Stock Exchange or the NASDAQ, whichever exchange they're listed on. They'll actually be kicked out of those exchanges if they don't get that share price back up. And the quickest way to get the share price back up is to just do a reverse split, do a 10-to-1 or 20-to-1 or 100-to-1 reverse stock split to get that share price all of a sudden back up to something reasonable like $10 a share or $20 a share. Now, as long as you're trading responsibly, you're never really going to have to deal with any of these stocks that are having a reverse stock split because these are garbage companies typically, right? And if you're trading responsibly, trading good products, you're not going to trade these kind of garbage companies that are more likely to go bankrupt tomorrow than actually see an increase in share price, right? So if you're one of these people that are, for whatever reason, trading these garbage penny stock type companies, you probably need to stop that. And also, if you see a company in your portfolio that's having a reverse stock split, again, that's not a good sign. You may want to actually get out of that position because usually when these companies have declined so far to do a reverse stock split, typically they've declined, 90%, 95% from their all-time highs to finally land themselves into that kind of territory. So that's a really bad sign. And typically when they start doing reverse splits, it won't be the last, right? Because they'll reverse split to get their, for example, their 50 cent a share price back up to, say, $20 a share. But the company's still going to keep going down. It'll find itself back in the same situation in a year or two. Then it'll do another reverse split, and you're going to be left with essentially a large portfolio of stock that is practically worthless at some point. And one day, of course, the company will go bankrupt and your shares will actually be worthless. So if you find yourself holding shares of a company that's doing a reverse split, I would advise you to think strongly about getting out of that position. Anyway, just some food for thought. Peace, guys.